Welcome back to Investing Talk Podcast.
It is good to be here. Although, I have to say, the mood in the market right now is pretty intense. We're looking at Novo Nordisk today.
We are.
And if you've glanced at a stock chart in the last 24 hours, you know exactly why we need to have this conversation.
As usual, before we start, subscribe, like, and comment to this video to support the show. And honestly, looking at the comments from yesterday, I think a lot of people need like a therapy session more than a stock analysis. We have to talk about the absolute carnage yesterday. February 3rd, Novo Nordisk dropped more than 11% in a single session.
It was a bloodbath. There's really no sugarcoating a move like that for a company of this size.
It's just so confusing. I mean, look at the setup. They just reported their 2025 numbers. Sales growth up 10%. They beat expectations. They are literally the king of the weight loss hill.
Right.
And then out of nowhere, they dropped this guidance for 2026 that just gutted the stock.
It caught everyone completely off guard. It wasn't just a miss, it was a complete narrative shift.
Yeah. They're projecting adjusted sales to decline by -5% to -13%. Not slow growth, negative growth, a double-digit decline. For a growth stock that people pay a premium for, that feels like the engine just fell out of the car. So I have to ask, is Novo Nordisk broken? Or was yesterday just a massive panic?
That is the multi-billion-dollar question. And look, I get the panic. When you see negative 13% growth, your instinct is to hit the sell button and ask questions later. But I'm seeing something different here. I'm looking at the pieces, and I see a classic, albeit painful, capitulation moment.
Capitulation implies the bottom is falling out so the real buying can begin. But that requires a thesis that the company isn't actually dying. You have to convince me, because that negative 13% number is just staring me in the face. What exactly caused this cliff?
Okay, so it's not one single thing. It's a perfect storm of a few factors hitting at once. The headline number, that scary negative guidance, is driven primarily by the loss of exclusivity for semaglutide in very specific international regions.
Okay, so patents expire. We know that. Generics come in, price drops. That's the pharma life cycle.
True, but that's the smaller piece of the pie. The real story, and the reason the market is freaking out, is what's happening right here in the U.S. We're seeing significant pricing pressure.
Pricing pressure is a nice corporate way of saying we have to lower our prices because we have no choice.
In a way, yes. But you have to look at the mechanism. This ties into the MFN, or Most Favored Nations Agreement. This is a government pricing deal.
Okay, let's stop and dig into that, because usually when the government gets involved in drug pricing, it means margins get crushed. How does this MFN deal work, and why isn't it just a pure loss for Novo?
So under MFN, the government essentially says we want the best price you give to anyone else. It forces the price per unit down a lot. On a spreadsheet, that looks terrible because your profit margin on every single pen goes down.
Right. Which sounds like a disaster for a company that's valued on its high margins.
If you only look at the price, yes. But Novo is playing a longer game here. I view this as a margin trade for market share. By agreeing to this lower price, they are removing the friction for patient access.
Meaning more insurance companies will cover it.
Exactly that.
Yeah.
It opens the floodgates. There are millions of patients who wanted this drug but couldn't get it approved, or the copay was too high. This changes the math. So Novo's bet is we will make less per person, but we are going to treat 3, 4, maybe 5 times as many people. It's a volume play.
That's a risky bet, though. You're trading guaranteed high margins for hypothetical volume. If that volume doesn't show up right away, you're just bleeding revenue.
It is a risk, but there's a massive financial cushion that I think most of the panic sellers yesterday completely ignored. And this is where you have to read the footnotes.
I hate reading footnotes. That's why you're here. What did we miss?
The 340B drug pricing rebates. Specifically, a reversal of those rebates worth $4.2 billion.
Whoa, hang on. $4.2 billion. That's not a rounding error. Explain the 340B program quickly, because I think most people just see rebate and tune out.
Sure. So the 340B program requires drug makers to give outpatient drugs to eligible healthcare organizations at significantly reduced prices, the huge discount program. Normally, Novo has to pay these rebates out.
Okay, so it's money leaving the building.
Usually. But in this specific guidance, there is a reversal of these provisions. Think of it like a reserve they had set aside that they're now releasing back into the profit pool.
So it's a one-time accounting game.
Essentially, yes. But look at the impact. That $4.2 billion reversal boosts their reported 2026 operating profit by roughly 11% on a non-adjusted basis.
Wait, let me get this straight. The headline sales are down up to 13%, but the operating profit is getting pumped up by 11% because of this.
Precisely. That's why the adjusted sales number looks so scary. It strips that out. But the actual cash and operating profit for the business have this massive safety net. The business is much, much healthier than that negative headline suggests.
Okay, I see the cushion. That makes the downside less terrifying. But as an investor, I don't buy stocks for safety nets. I buy them for growth. If 2026 is just accounting gymnastics and lower prices, where's the growth coming from?
The growth isn't gone, it's just evolving. We are transitioning from the injectable era to the oral era. The biggest driver is the oral Wegovy launch.
Which literally just happened, right? January 2026.
Yes, last month. And I think the market is underestimating how big of a deal this is psychologically.
You think it's about the needle?
It is 100% about the needle. We live in a bubble where we think everyone's fine injecting themselves, but there's a massive segment of the population, millions of people who want to lose weight but just will not cross that barrier.
Yeah.
It feels too medical, too serious.
Convenience and compliance. Taking a pill is a lot different than prepping a needle.
It changes the entire user psychology. A daily pill democratizes the treatment. It opens up the casual weight loss market, for lack of a better term. It's a superior patient experience for a huge demographic. If uptake is good, the volume we talked about earlier, it's going to explode.
But is it just the pill? I feel like every pharma company is chasing an oral pill now.
It's becoming crowded, but Novo isn't stopping there. We need to talk about MSH.
MSH. Every time you say that, I think of the TV show. But we're talking about liver disease here.
Metabolic dysfunction-associated steatohepatitis. It's a mouthful.
Let's just stick to MASH.
Deal. MAH is basically a severe form of fatty liver disease. It causes scarring, inflammation, and can lead to liver failure. For a long time, there was basically zero treatment. An untapped market.
And Novo has a foot in the door.
Better than a foot. They just got a label expansion for it.
So what does that mean in terms of dollars? Does it actually move the needle for a giant like Novo?
It's a severely underserved market. Analysts are projecting this one indication could be worth over $1 billion in peak sales.
Okay, $1 billion is real money.
It's a blockbuster drug on its own, just hiding inside the obesity franchise. And looking even further out, past 2026, you have the pipeline. We have to talk about CagriSema.
I've seen that name. Sounds like a spell from Harry Potter. This is the next-gen stuff.
This is the recovery engine for post-2026. CagriSema is a combination therapy. It's a dual agonist.
Okay, unpack that. What does dual agonist mean for someone who isn't a biologist?
Current drugs like Wegovy target one hormone receptor, GLP-1, to signal I'm full. CagriSema targets GLP-1 plus another hormone, amylin, which tells your stomach to empty slower. You're attacking hunger from two different angles at once.
So it's just a more potent cocktail.
Significantly more potent. The bull case is you suffer through the 2026 pricing reset, ride the wave of the oral pill, and then get rewarded with this superdrug in 2027 and 2028.
Sounds great, but we aren't operating in a vacuum. For 2 years, the narrative has been Lilly versus Novo. Eli Lilly has been the darling. Why bet on Novo now?
That competition is real, but you have to look at execution. Remember 2025, what was Lilly's big problem?
They couldn't make this stuff. You couldn't find Zepbound anywhere.
Exactly. They hit a massive manufacturing wall. You can't sell what you can't ship. This is where Novo's boring industrial strategy pays off. They have established a manufacturing moat. They have spent billions on their supply chain.
So while Lilly's scrambling to build factories, Novo is ready to ship.
That's the advantage. Novo has the capacity right now.
Yeah.
And they have diversification. Lilly is heavily concentrated on tirzepatide. Novo has the oral, the injectable, CagriSema coming up, and don't forget the legacy business.
The insulin.
Levemir, Tresiba. It's the boring part of the company. It's not flashy, but it prints cash.
It's the cash cow that pays for the R&D.
Correct. It acts as a stabilizer. That cash flow lets them acquire companies like Akero Therapeutics. They have what we call a fortress balance sheet. They can weather a storm like this.
Okay, fundamentally, the company is still a beast, but I want to pivot explicitly to the charts. Because I'm looking at the price action on February 3rd, and I don't care about balance sheets when I see a vertical red line. It just looks like a falling knife.
It definitely looks ugly if you zoom in.
It's terrifying. The market is clearly pricing in a worst-case scenario. It feels like investors are assuming the sky is falling, that Medicaid coverage is gone, generics are eating them alive. Why would you try to catch a falling knife?
Because in my view, this is a Textbook capitulation style setup.
Capitulation is a strong word. That usually means the last bull has thrown in the towel.
That's what it feels like. Look at the valuations. After this drop, the stock is trading at multiples that are depressed relative to its own history. And check out the implied volatility.
Through the roof.
High implied volatility often precedes what we call a mean reversion rally.
Okay, mean reversion rally. Translate that.
It's the rubber band effect. When everyone panics and sells, the price stretches too far down. Eventually, it has to snap back or revert to the average. The sell-off was too violent. But the strongest buy signal wasn't on the chart. It came from the boardroom.
You're talking about the buyback.
The 15 billion Danish kroner share buyback program.
Which is roughly $2.2 billion US. That's a lot of ammo.
It is a massive vote of confidence. Think about the timing. The stock crashes, and management immediately says, we're authorizing billions to buy our own shares. They're telling you, loud and clear, we think our stock is on sale.
That does create a kind of floor for the stock price. It's hard for it to go to zero when the company itself is a guaranteed buyer.
It puts a safety net under the share price.
So we have a safety net from the buyback and one from the 340B rebate. There's a lot of cushioning here. But let's move to the market perception, because right now, the mood feels schizophrenic. I'm looking at the headlines, and it's a mess.
We call that bifurcated sentiment. The market is split in two.
On one side, you have the headlines from yesterday. Compressing margins and collapsing guidance confirms sell thesis. Brutal. The market hates negative growth.
That's the reactive crowd. They see the negative sign and they hit sell. They aren't looking at the rebate reversal or the MASH potential.
But then just a few days ago, on January 30th, we saw upgrades. Momentum meets headwinds before earnings.
Right. There were major analysts upgrading the stock before the drop. Why? Because they're betting on the momentum of the oral Wegovy launch. They see the pill as a catalyst the market isn't appreciating yet.
There was also this narrative around January 28th about an earnings surprise. The idea that the market was too pessimistic. Clearly not pessimistic enough given what happened.
That leads us to where we are now, the show me phase. The optimism is gone. The sentiment won't flip until they see execution. They need to see the data on the oral pill uptake. If that pill starts flying off the shelves, all those bearish headlines will vanish.
But we have to play devil's advocate. I'm the skeptic here. I'm not letting you off the hook. Let's look at what could go wrong. Let's drill down into the risks.
Fair enough. What worries you?
Risk number one, oral Wegovy flops.
That is the single biggest risk to the thesis.
I mean, what if patients don't switch? Maybe there's no financial incentive. What if people try the pill, hate the side effects, and go back to the needle?
Yeah.
Or worse, what if Eli Lilly gets their oral tirzepatide approved faster than expected?
Those are all valid concerns. If the pill doesn't sell, the bridge to 2027 collapses. I would argue, though, the guidance is already pretty conservative. That wide range, -5% to -13%, they aren't pricing in a miracle.
Okay, risk number two, policy permanence. You said the MFN pressure is a 2026 headwind. But in politics, temporary cuts have a nasty habit of becoming permanent. What if the government decides they like paying less for these drugs, and those cuts become the new baseline?
That is the political risk. If those cuts stay, the revenue hole gets deeper and the margins never fully recover. Novo would become a lower margin business permanently.
And risk number three, the value trap. We see this all the time. A stock looks cheap because the price dropped, but the business is actually shrinking. Buying a company with sales shrinking by 13% is historically dangerous.
That is the classic definition of a value trap. You buy it because the PE is low, but the E, the earnings, keeps disappearing. That's why you have to believe in the pipeline. If you don't believe in Cograthema and ASH, then yeah, it's a value trap.
So with all that fear on the table, the falling knife, the government pressure, the shrinking sales, we have to come to a verdict.
We do.
Transitioning to the final score and strategy, you've looked at the fundamentals, the charts, and the risks. What is your bullish score for Novo Nordisk?
I'm giving this a 7.5 out of 10.
7.5. That is surprisingly high for a company guiding for negative growth.
It is high because you have to look forward, not backward. My thesis is that Novo Nordisk is a high-quality compounder trading at a cyclical trough.
A low point in the cycle.
Exactly. The 2026 guidance miss is what we call a clearing event. It's like ripping off the Band-Aid. The bad news is out. It's priced in. The market is now pricing in the absolute worst-case scenario.
So the surprise can only be to the upside.
Effectively, yes. The risk-reward is asymmetric. You have limited downside because of that fortress balance sheet and the massive buyback. But you have substantial upside if the 2027 recovery story takes hold.
So how do we play this? What's the strategy?
The strategy is to buy on weakness into the Q4 earnings, which are coming in early March.
So don't blow the whole budget today, but accumulate.
Correct. You're looking at a 12 to 18-month hold. This is not a day trade. This is a swing trade for the earnings surprise, transitioning into a long-term hold for the 2027 recovery. You need patience.
You're betting that in a year and a half, we'll look back at February 2026 and say, I can't believe we got it that cheap.
That's the bet. And the key thing to watch, the final catalyst, is the oral Wegovy uptake reports in February and March. Watch those prescription numbers. If they're good, the stock will move.
So the verdict is, it's a chance to buy a market leader at a discount, provided you have the stomach for some short-term volatility.
That sums it up perfectly.
Before we go, I want to leave the listener with a thought. We talk about these drugs as growth stories, but if oral weight loss pills become as common and cheap as, say, statins for cholesterol, does Novo Nordisk stop being a high-flying, tech-like stock and become a utility? Just a boring company that keeps the lights on for public health.
That's a fascinating thought. If obesity becomes just another managed condition, the premium valuation might disappear forever.
Something to chew on. That's it for today's look at Novo Nordisk. Make sure to subscribe, like, and comment to support the show. We'll see you next time.